When preparing financial documents for the sale of an APS in Denmark, it is essential to approach the process with the same rigor and transparency that a professional investor or corporate buyer would expect. The objective is to provide a clear, credible, and well-structured financial picture of the company so that a prospective buyer can quickly understand performance, risks, and future potential, and so that you, as the seller, minimize surprises, negotiation friction, and potential liability. The starting point is to ensure that your statutory financial statements are fully up to date and compliant with Danish regulations. This typically means having the latest annual report prepared in accordance with the Danish Financial Statements Act, properly approved by the General Meeting and filed with the Danish Business Authority. If you are selling mid-year, buyers will expect not only the latest approved annual financial statements, but also recent management accounts, usually on a monthly or quarterly basis, to bridge the gap between the last financial year end and the anticipated closing date. These management accounts should be consistent with your annual reporting principles, reconciled to your general ledger, and accompanied by clear explanations of any unusual items or one-off effects. If your APS is of a size where audits are required, or if you have voluntarily engaged an auditor, make sure the most recent audited financial statements, auditor's report, and any management letters or significant audit findings are organised and ready. Where audits are not mandatory, many sophisticated buyers will still expect some form of external comfort, such as a review engagement or at least a well-documented accounting policy note set. So consider whether commissioning limited assurance in advance could support value and trust. Alongside your statutory accounts, focus on presenting a clean and intelligible breakdown of revenue, margins, and costs. Buyers will want to understand revenue drivers by product, service line, customer segment, or geography, depending on your business. Prepare schedules that show revenue trends over the past 3 to 5 years, key customer concentrations, seasonality patterns, and churn where relevant. On the cost side, segment your operating expenses into logical categories such as personnel, rent, IT, marketing, and other operating costs, and provide commentary on significant fluctuations. If there have been extraordinary expenses, such as legal fees related to a dispute, restructuring costs, or one-time IT investments, highlight them clearly, and where appropriate, present an adjusted earnings figure, such as adjusted EBITDA, that strips out these non-recurring items, while still providing full transparency on their nature and amount. A crucial aspect in Denmark, as elsewhere, is working capital. Buyers will assess whether the business can operate normally without injecting additional cash after acquisition, and this directly influences the final price through mechanisms like a normalized working capital target. To prepare, build a detailed overview of trade receivables, trade payables, inventory if applicable, and other short-term assets and liabilities. Demonstrate historical collection patterns on receivables, aging analyses, write-off policies, and any material overdue balances. For payables, document your typical payment terms with suppliers and any deviations from normal practice. If inventory is material, ensure that you can explain your valuation method, whether it is cost, weighted average, or another method, and provide inventory aging and any obsolescence provisions, supported by clear policies. Tax documentation is another central element. Organise your corporate tax returns for recent years, correspondence with the Danish Tax Agency, and documentation of any ongoing or past tax audits. Provide summaries of your VAT filings and payments, payroll tax compliance, and any deferred tax assets or liabilities recognised in your financial statements. Buyers will look for clarity on whether there are hidden tax exposures that could surface after the transaction, so proactively summarising any positions that could be considered uncertain or any historical disputes can reduce perceived risk and protect the value of your APS. In parallel, give careful attention to your balance sheet structure. Prepare an itemised list of all assets and liabilities, with special focus on areas that often attract attention in due diligence, such as shareholder loans, intercompany balances, contingent liabilities, and off-balance sheet commitments. If there are loans from owners or related parties, clarify the terms, repayment expectations, and whether they will be settled, converted, or remain in place after closing. The same applies to guarantees, leases, and long-term contracts that could impact financial obligations. Where relevant, aligning your financials with the expected transaction perimeter, what is actually being sold, is critical. For instance, if there are non-core assets or personal expenses booked through the company, these should be identified, normalised, and ideally removed well before launching the sale process. Key performance indicators are often underappreciated but highly influential in shaping buyer perception. In a Danish APS, especially within services or technology, buyers will want to see metrics such as revenue growth rates, gross margin development, customer acquisition cost, lifetime value, and recurring versus non-recurring revenue shares. Preparing these indicators from your financial data and presenting them in a coherent, well-documented way makes it much easier for a buyer to model the future and justify a strong valuation. Where your company is more traditional, such as manufacturing or trading, focus on metrics like capacity utilization, contribution margins by product category, and return on invested capital. For all KPIs, ensure that the calculation methodologies are clearly described and that the figures can be reconciled back to your financial statements or management accounts to avoid confusion or mistrust during due diligence. As you assemble these materials, think in terms of a structured data room. While the sale of an APS in Denmark can vary in complexity depending on size and buyer profile, a well-organized virtual data room is increasingly standard practice. Within that data room, you should include folders for historical financial statements, management accounts, budgets and forecasts, detailed ledgers, bank statements, tax documentation, key contracts with financial relevance, and HR-related cost information. Having consistent naming conventions, clear version control, and a summary index reduces friction for buyers and signals professionalism. Before granting access, conduct an internal review with your finance team, your external accountant, and ideally, your legal advisor to identify any gaps, inconsistencies, or potential red flags. Addressing these in advance, either by correcting errors, refining disclosures, or preparing clear explanations, can prevent them from becoming leverage points against you in negotiations. Projections and business plans form another pivotal component. Most serious buyers of an APS will expect at least a 3-year financial forecast, ideally linked to a commercial plan that explains underlying assumptions, such as market growth, pricing strategy, cost efficiencies, and investment needs. When you prepare these forecasts, anchor them in historical data and make the assumptions explicit. For example, link revenue growth to observable pipeline development, signed contracts, or expansion initiatives, and link margin improvements to specific cost-saving measures or operational changes. Overly optimistic but weakly supported forecasts can damage credibility quickly, so it is better to present realistic scenarios with clear upside levers than to overpromise and then struggle to defend your numbers during questioning. Finally, align all financial documentation with the legal and transactional structure you and your advisors anticipate. The sale of an APS in Denmark will typically be executed as a share deal, and buyers will look to the financial documents as the foundation for representations, warranties, and any earn-out or price adjustment mechanisms. Make sure that your financial statements accurately reflect the economic reality that will be transferred, that there is clarity on cash and debt items to be included or excluded from the purchase price, and that you understand how concepts such as cash-free, debt-free valuation, and normalised working capital will apply to your specific case. Coordinating early with an experienced Danish M&A advisor, auditor or lawyer can help you tailor your financial document package to the expectations of the buyer universe you are targeting, whether that be local investors, Nordic strategic buyers or international funds. By approaching the preparation of financial documents with this level of thoroughness and structure, you not only streamline the due diligence process, but also position your Danish APS as a transparent, well-managed and investable business, ultimately supporting both a smoother transaction and a stronger outcome on valuation and deal terms.